You will see big benefits in a short time, but you need to think in terms of years. Tienes que contar en A y T Os para eso. When we mention 108,000 in gold and 14,250 in silver, it's not going to happen next week. It's not next month, but you will be surprised by how much things will change. Just look at how we were below 1,000. Nunca hemos alcanzado el máximo de 1923. Eso fue en 2011. Then we were stuck at 2,000 for a long time. Ahora estás a punto de llegar a 4,000. After breaking out of a 4-month period of stable prices in early September, the price of gold has been rising steadily in recent weeks. On Tuesday, BMO Capital Markets commodity analysts released their price forecast for the fourth quarter, raising their expectations for gold and silver. The U.S. government is close to shutting down again, focusing again on the country's growing debt. A Canadian bank thinks this will be the main reason for gold prices to rise until the end of the year. Veteran analyst Francis Hunt believes that gold could reach around $108,000. He claims that gold's real bull market started in 1913, when the Federal Reserve began reducing the value of paper money. Francis Hunt just used a tough piece of technical Fibonacci analysis on gold's huge multi-decade trend. His goal is not just a few $1,000s more. He warns that these levels could cause a sharp drop and discussions about a bubble, but he says this would be a normal part of the bull market. Hunt thinks that gold could rise more than 7 times its current price, pointing out that later increases usually happen more quickly and with more ups and downs. Francis said that was the moment when the creation of debt and the lowering of currency value really started. He points out that before the Fed was created, gold kept its buying power stable for many years, while the value of the dollar stayed nearly the same. Starting in 1913, inflation caused by debt, world wars, and financialization completely changed the system. The greenback is having a tough 2025, falling more than 9% this year due to worries about the independence of the Fed and trade war issues. This logically increases the value of gold in dollars. Before we get into Francis Hunt's important insights from his recent interview, don't forget to subscribe and click the bell icon so you never miss an update when truth meets the market. Vamos a ello. We're leaving from here below. Actually, it's there. It's a bit lower there. We're leaving from here in July 99. Es como se hace una extensión de Fibonacci. You take that low. You take it to the next level. Eso es $19.23. You are starting with 252ers. Brown's rear end. We all know about Brown's poor decision, how he sold it for a low price, aware that inflation was approaching. He acted foolish and claimed they needed the money, selling Britain's gold under a different name on the list. Yes, we can only speculate about whose name that was. We continue this until now and say, all right, we want 1.618. We want a number that stands for 1.618. Eso significa que es 61.8%, longer and further than the lowest point of the bear market on this new 5-leg rise, which goes 61% further. In the drawing, I've shown that I recorded the low at about 1045, or maybe a little closer. It was definitely around 1045. I want to get it as close as I can, but it's a bit difficult. Est? Bien, lo pondremos all? En el Yemenania, that is correct, 1046. Where can we find the 1.61 est? It's that number, 27,988 for gold. Your CD leg can bring you to 27,988, close to 28,000. Right now, I expect a small drop in prices. I am sharing this about the future to keep you positive because many people will start to feel negative and say that the bubble will burst and it's all finished. The current price is 27,988. Now, whether you arrive there quickly or take your time, which I think will happen, you are going to multiply by 3,888. Actually, we do it the opposite way. We're going to 28,000. Es casi 28,000. These do not need to be exact to the penny. Se debe alcanzar o superar un poco el 171.8. 28,000. Divida donde estamos ahora. 38. Digamos que podrás comprar a 3,800. 7 times, 7.36 times where you currently are. In percentage, it's 636%. you will earn 636. Casi lo hice al revés. 636% desde aquí. Another interesting thing about time and duration is that as you go deeper into the 5 waves, they usually become faster. Esa no es las 5 oleadas que queremos. El primero, el retroceso. What usually happens is that the slope becomes steeper than the last part, and we are going up to this point. Esto puede pasar a menudo, in a shorter time than the first part slope, which might allow you to get there. Then you have a decrease. It can be more unstable, making it drop more quickly. Then you start with your first step. We are currently discussing the delta point CD, which is 1.618. Ya es 27,988 para el oro. Understood. Let's look at the crazy number, which is very moon boy of me, 108,000. And what comes with that? What could be linked to that? I will present you with the same setup for one option. In this example, we considered that there was a contained bull market followed by a bear market. This is a completely new and fresh start to a bull market. What I'm going to tell you is this. What if the main way we view gold and precious metals isn't just about something that began in 2000? For this, I will return to the Owanda chart with the actual history, turn off the eyes, and remove that FIBO. What if everything started with the creation of fractional reserve banking? This led to debt, overspending, the decline of fiat money, and the rise of inflation. Inflation happens when governments spend too much. They do this by making more money and increasing debt quickly. Before the Federal Reserve was created in 1913, there was a long time when gold prices stayed the same. Flat gold prices mean that there wasn't a significant drop in the value of your dollar. Gold had the same price, and you bought the same amount of groceries for that price, and everything was going well. You're discussing the years between 1833 and 1913. Eso está por aquí. I've kept drawing my pink cube during a long time of stable gold prices. Now, I will never say that some things didn't increase. There would be celebrations, times of hunger, dry spells, and many other events. I think they increased very slowly because the Fed took time to grow and create debt. This is part of why they started 3 wars, including 2 world wars, and a harsh Georgian Bolshevik communist takeover of the Orthodox Christian Russians, who suffered mass killings totaling between 20 and 60 million. This was the greatest genocide in history, followed by what happened in China during the introduction of communism there. Those are the major genocides in the world, not other events you might be mistaken about. However, if we look at 1913, we can say that the start of debasement began here. Vis ISO. It states 2012. What if the way we view gold is completely different, and it can be seen as one large 5-wave movement? This is the impact of financializing everything on your society. Let me get it. There's 1911 and 1905. Let's expand it. What if that's how we see it? In summary, your Elliott wave. Comienza Haku. En 1913. That is your AB leg. You have a 20-year pullback, which is your BC leg, and now you are moving forward on the C and D legs, still in the CD leg phase that began in 2000. 99 to 2000. You might be wondering where the 161.8% leads you. There is a large 5-leg Elliott wave that began when the Federal Reserve started in 1913 at a set price. The pressure from having a banking cartel and borrowing during these years is essential for the later strong performance. Manipulated by decree, the fact that it tore this much during these times proves that it happened. Instead of a steady rise, it experienced a long flat period due to a decree, which resulted in a much steeper trend. Y adivina qué? That manipulation has been happening quietly in your silver and gold markets today. You're about to experience the consequences of being manipulated by the shorts, which will offer the same outcome as this CD leg. Let's clarify that for you. Let's go back to 1913. In 2025, markets will have slowly adjusted to Fed rate cuts, leading to lower real yields and supporting precious metals. That changing situation is a key reason for silver's rise. The shift away from US dollar dominance has grown a lot. More than 100 countries are now working to diversify their reserves away from the USD. This change means more than just adjusting the portfolio. It indicates a change in the way the global financial system is set up. Francis Hunt noted that silver's potential increase could reach nearly $15,000 using Fibonacci extension analysis. His gold call suggests a gold-silver ratio close to 7.6, a very unlikely but possible result within his Elliott wave model. Basically, if China or Saudi Arabia demands delivery at futures contract expiration, even just a small part of what they own, it could spark a physical silver rush that we've never seen before and might not see again. Volvamos a la entrevista. You have noticed what could be the biggest upside HVF, with a target of $330 right in front of you. After that, if you look at the lowest fixed points, remember that silver used to let you buy things for just cents, like it was 28 cents. At that moment, it was 28 cents. What's the low? In 1932, during the Great Depression, silver was worth 28 cents, my friends. You are discussing today 46, 17 cents. You've briefly gone into the 47s and then pulled back. This flagpole shown here gives you a height of 5.96. The upside HVF that I will show you will provide you with the 330 that we have mentioned. If this is the leg that goes up and the leg that goes down, the 1.618 for silver is higher up. What applies to gold also applies to silver. If this is a long bull trend with a 20-year correction, and the BC leg represents your C, let's label those letters as A, B, and C. The 596 is a projection for a bull flag, but the 1.618 will provide you with $14,000 in silver. $14,000. No, sir? El mismo $1 que sol? Haz conocer. It will feel like a penny. They will likely have removed some zeros by then, but that will help keep the value. 40 and $249. With 108,000 gold, you likely have around $250 in silver. That would still be a pretty wide gold-silver ratio, by the way. One of them might do worse or better than expected. Hag, Moslow. Both are treated the same way and do this. This is all brainstorming at a big picture level, really big picture brainstorming. It's enjoyable. Don't take it too seriously. Es divertido. If you have 108,000 and divide it by 14.2 thousand, you get 7.6. This is a single-digit gold-silver ratio which is included in our predictions. If both gold and silver reach their 1.618 levels at the same time, the gold-silver ratio will drop from 86 to 7.6. The gold-silver ratio is interesting at single-digit levels during the 5 upward movements. The 3 and 2 pullback legs are referred to as A, B, C, D, E, and the E, F leg in Elliott wave theory. AQU tienes. Some of the most optimistic predictions for precious metals include silver reaching 14,250 and gold hitting 108,000, with the gold-silver ratio dropping to 7.6 from its current levels of 86 or 75. What is it? Claro, dame el texto, hijar. La par, frases para ti. What's the current status? The gold-silver ratio is now, I believe, in the low 80s, specifically XAU, XAG 82.7 at this moment. The gold-silver ratio is 82.7. I want to share a few more interesting things while we have the live stream. There are 852 of you watching. Thank you. We'll also show you the Dixie and explain why I think it could be important. Let's go over the HVF and daily pattern we discussed. Let's create all the charts for what we discussed. Oro, XAU, USD, Juar Fico Diario de Oro, HBF al alza. Vamos a deshacernos de nuestras mentiras. We've enjoyed our time with the larger time frames. Vamos a ver el your Fico Diario. Let's give it our all. That was your goal. This shows that you are doing better than expected, and you're seeing an interesting candle that indicates this. Perhaps it's a slight rejection. We could be correct or incorrect, but it's a red candle. No hemos tenido muchos. From here, there are 1, 2, 3, 4, 5, 6, 7, 8 green in a row, with just 1 red, 2 red, 9, 10. Then we had this pattern that continued, which had 11 and 12 green candles, but also 2 red candles. That's 4 red, 5, making 13, 14, 15, 16 towards our target greens, with only about 8 red candles, most of them very small. Now, there's a chance that you'll encounter some more challenges. We'll show you the reason for that. We set this goal on the Dixie, focusing on platinum. Gold's rise is a great example of emotions in the market. When there are geopolitical tensions, large budget deficits, and support from central banks, traditional rules become important once more. Recently, President Donald Trump's efforts to change America's relationships with its main trading partners have unsettled governments and increased the excitement around gold prices. If there is a sudden high demand for physical gold and silver, could it quickly change the global financial system more than people think? Leave your opinions in the comments below. If you found this video helpful, please support our channel and turn on notifications to keep updated on our newest videos. Nos vemos en el próximo video.